Oil prices are trading under pressure from two factors. Firstly, the Biden administration is considering releasing some amount of U.S. oil from the Strategic Petroleum Reserve. Secondly, Russia's decision to transfer payments for the Russian natural gas to rubles adds uncertainty to the market. The new rules are due to come into force on April 1. However, the question remains of why oil is still trading above $100 per barrel. Let's figure it out. As always, the devil is in the details. The U.S. decision to sell off the part of oil strategic reserves is aimed at addressing inflation in the country. This means that oil will be released exclusively to the domestic market. Thus, this will have no impact on the rest of the world, which is also suffering an unprecedented rise in fuel prices. As for Russia's demand for gas payments in rubles, Putin said European companies could continue paying for gas supplies in euros or dollars. The money will be paid into the bank and then transferred in rubles to Russia. German Chancellor Olaf Scholz did not agree to this procedure in the talks, but asked for written information to better understand the proposal. In response, Russia once again threatened to suspend supplies. Thus, the situation remained uncertain. Against this background, oil prices entered a slight correction. Moreover, this downward movement is likely to continue today. According to the trading chart, after a short-term recovery, Brent crude oil futures came under pressure again and fell below the 110 mark. This indicates that the corrective move is still in force. Given the ongoing price fluctuations, the price may well fix below $105 per barrel, and in this case, the benchmark will extend losses. Long positions will become relevant after the price consolidates above the level of 115. Although gold advanced to $1,930 per ounce, it remained range-bound. Let me remind you that the metal has been trading in the range of $1,920 and $1,940 for 2 weeks. In other words, gold is standing still. Oddly enough, economic uncertainty that should contribute to a rise in the value of safe haven assets has only increased in the last few days. Thus, since the situation is becoming more and more uncertain and gold is stuck in a tight range, the likelihood of a sudden jump in its value only increases. From a technical point of view, to extend gains, the quote needs to stay firm above the $1,940 mark. Otherwise, swings between the levels of $1,905 and $1,940 will continue. The behavior of the ruble is rather unusual after all. It returns out that there will be no transition to gas paying in rubles on April 1, while it's precisely this prospect that contributed to the Russian currency's growth. However, the ruble continues to gain value instead of suffering losses. Thus, trading on the MOEX Moscow exchange was conducted below the mark of 85 rubles per dollar. In the interbank market, ruble bids reached as strong as 75 against the dollar. Of course, the ruble's rally can be attributed to a weaker dollar across the board. Besides, the Russian currency is being supported by contradictory statements made by the various officials of both the Russian Federation and the European Union. This only adds uncertainty in the market. Well, the main factor driving the ruble exchange rate up is that Russia continues to seek payments in rubles for gas sold to unfriendly countries and is not going to abandon its decision. As always, the devil is in the And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us.